and welcome to Retire Smart Maryland. My name is Cynthia Defazio, and I'm joined today by Prashant Sabapathi of Elite Income Advisors. Prashant, how are you today?
I'm doing so well, thank you. How are you?
I am doing fantastic also, and I'm excited that we're back in the studio today because I'm so looking forward to our show. I know you've been extremely busy, obviously 1 week after the next. You're booking consultations with new clients coming in who want to have the portfolio review. So I should ask you, Prashant, why is planning for retirement so very important?
I think having a plan leads to peace of mind.
Okay.
And that is the crux of what we do, is we try to make your retirement a worry-free retirement. And so I get so many people who know people who retired in 2008 and then had to go back to work, or they were just about to retire in 2008 and then the market crashed and they felt that they couldn't do so. Even more recently, we've had people through the start of the pandemic think that they were going to retire, and then the market completely crashed in the beginning part of 2020. And people panicked, they made the wrong decision, maybe sold investments at the wrong time and never recovered the way that they maybe should have. And so having a plan in place that allows you to deal with all this uncertainty is ultimately what leads to a retirement that is stress-free. And I think that is the single most important reason you want to have a plan in place, is so that you can alleviate a lot of the stress that comes with the uncertainties of retiring in a low interest rate, extremely volatile stock market.
I am so glad that you brought up the stock market, Prashant, because obviously a lot of people in the viewing audience, they're investors in some capacity. They're probably connected to the stock market, investing in the stock market. How can people protect themselves when it becomes unpredictable? Let's say it goes down drastically. What do you advise your clients to do?
So it's important to have that plan in place. So people always ask me, when we went through the beginning part of 2020 and the stock market went down in a pretty catastrophic type of way, people always say, man, your phones must have been ringing off the hook. And I said, believe it or not, that wasn't really the case. And the reason was, our clients know that when you're invested in the market, you're always going to incur some level of a risk. That's just inherent with investing in the market. However, if you have a plan where you can understand kind of like what your worst case scenario is, or what your projected worst case scenario is, you don't really need to worry about it when the market goes crazy. And so through the beginning part of the pandemic, when the market was going down, our phones, they were ringing here and there, but we weren't incredibly busy on the phone reassuring people, because our clients already knew that their plan would hold up to uncertainty. And I think that was a really telling thing, because if that wasn't the case, it's natural to feel scared. I'd say when we were doing our TV shows back then, we were getting more calls from people who weren't clients, who were seeking advice at that point in time because they were scared, and that's a natural thing to go through. But if you have a plan in place, you can take a lot of that stress off your plate.
Prashant, I should ask you, when it comes to investing in the stock market, do you ever take a look at someone's age and correlate that to how much risk they should be taking?
So there's a kind of a differing train of thought on this with me and my team. Because we believe that retirement is all about income, the point of having your retirement portfolio there is to generate the type of income that you're going to need in retirement. And so I've had people who are 80 years old or 85 years old who maybe get a great pension from the federal government. And so that person is able to just live off of their pension and Social Security very comfortably, meaning they're not actually withdrawing from their portfolio. And so that person may be able to actually be a lot more aggressive than someone who doesn't have a pension, who only has Social Security, because every dollar in that person's portfolio, who might be 50 years old, heading for retirement with no pension, their portfolio is going to be used to generate income. So I don't necessarily correlate age with risk. I correlate risk with income. Okay. If you have enough income to do everything that you want to do, it actually gives you a little bit of a license to take more risk with your money and grow your money at a potentially faster rate. But with that being said, if you've read my book, you've heard my radio show, you've probably been watching the TV show for a while now, losses hurt more than gains help is what I always say. And so our first priority is to look at the lowest risk way to generate income in retirement. I think that's where it all starts in the financial planning process.
Okay, thank you, Prashant. So obviously with our offer today, you're going to be opening up the phone lines in just a few moments, offering a portfolio review. That, of course, ties into the stock market as well. So let's talk about that. Is it like a portfolio x-ray?
Yeah, that's exactly what it is. And so when we look at a portfolio review or an x-ray, what we're doing is we're assessing risk first. So some people will be getting a great return on their investments, but they'll also be taking a risk, a level of risk that's outside of their tolerance. Some cases we see people who are investing within their tolerance, but the return they're getting is not anywhere near as high as it should be. And so when we do this portfolio review, we're going to marry these two things together. How much risk are you taking and how much return are you getting? Because for every amount of risk that you take, there should be an efficient amount of return. And it's kind of surprising, actually, how often these two numbers or these two metrics do not match up. And so when we do that complimentary review for people, it allows you independent, non-biased insight into how your portfolio is positioned. And I think that's a really important thing. And the last thing we'll do as a kind of an add-on to that x-ray is we'll look at the fees in your portfolio.
Oh, okay.
Yeah, if you're working with an advisor, they're probably charging you some kind of advisory fee, which is pretty typical. And if they are, you want to understand whether or not you're getting your money's worth. I'm big on examining fees because even in my personal life, I don't have a problem paying a fee for anything as long as I feel that I'm getting my money's worth.
Sure.
And it's incredible how often we do these analyses and find that people are not getting their money's worth.
Okay. Well, Prashant, we're going to be opening up the phone lines in just a moment. So do you want to tell the viewers at home what exactly they can expect to receive by being one of our callers today?
Yeah, so if you are able to get one of the first 10 spots on our calendar for the next couple of weeks here, you'll be able to come in, have that confidential, complimentary, no obligation conversation with me and my team at Elite Income Advisors. And when we take a look at your retirement situation, we'll give you an opinion on the risk and reward in your portfolio. If you're concerned that you cannot weather another down market before you head to retirement, then you need to pick up the phone and give us a call. If you're concerned that taxes may impact your income in retirement, you need to give us a call. If you are concerned that you are paying too much in fees and you don't know the value that you're getting for paying those fees, you need to pick up the phone right now and give us a call. Be one of the first 10 callers to call in. The phone number is 833-308-5200. We'd love to host you at our brand new headquarters in Ellicott City. So pick up the phone, give us a call, and get on the schedule.
Prashant, thank you so much. To the viewers at home, the phone number to call is on your screen. That number is 833-308-5200. We know you have a lot of questions about how to plan your perfect stress-free retirement. Prashant is offering this opportunity to the first 10 callers only. And if you book one of the complimentary portfolio reviews in the office in Ellicott City, you'll get a copy of Prashant's book, Fiscal Health, Retirement Wealth. So again, that number is 833-308-5200. We'll be right back after this very short commercial break.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go? And who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
And welcome back to Retire Smart Maryland. My name is Cynthia Defazio, and I'm joined today by Prashant Sabapathi of Elite Income Advisors. Prashant, a wonderful show that we're having today, talking about, of course, planning properly for retirement. We've talked about the stock market a little bit in segment 1. Let's talk a little bit right now about pensions, because obviously those are kind of becoming a thing of the past. So if you don't have a pension and you're entering into the retirement years, what do you do?
I get this all the time because, you know, when you read the book, you'll hear about having reliable sources of income, and pensions are a great way to do that. But if, you know, you're in a system that doesn't offer you a pension, how do you create your own? Because that's kind of what it comes down to. Back in the day, it used to be that when you did your retirement planning, 2/3 of your retirement was taken care of for you, right? The government took care of your Social Security. Your employer took care of your pension, and so all you had to do was work on that personal savings part of it. But what's happened as pensions have started to be underfunded, mismanaged, whatever you want to call it, they've started to go away, just like you said. And so what it's done is it's actually shifted the burden of responsibility. It shifted it from the employer offering the pension to the employee who doesn't have that pension. And so now the onus is on you to save more money into things like your 401k, IRA, Roth IRA to create your own pension. And so one of the things that we like to do is we take our clients through what we would call a 3-bucket approach to retirement planning, where we have money set in one bucket for cash emergencies. One bucket is a red bucket where we're able to grow your money with some risk. And then we look at an income bucket. And that income bucket is designed to recreate a pension-like income in retirement. And when you get your customized 3-bucket plan, it really kind of gives you a way to unlock your income in retirement. It's a great planning tool, and we've been using it a lot lately with our clients.
I love that, Prashant. Let me ask you, do you ever recommend that someone test drive their retirement to make sure that they're on the right track?
Yeah, I'm glad you brought that up. And so understanding your output is such an important part of retirement planning. So for example, if you were to come in to visit with us, one of the questions I would ask you, like we talked about, I think in last week's show, is what is going to make your life as fulfilling as possible? What do you want to do? Who does it involve? And how much is it going to cost? Because if you think that you're going to need to spend $7,000 or $8,000 or $10,000 a month, you need to have enough income coming in to cover those expenses. So when you talk about test driving your retirement, start to think about what your retirement looks like. What are you going to do? Where are you going to live? You know, what activities are you going to do that's going to make it fulfilling for you? And start to assign a dollar amount to those different things. And when you do that, it makes the planning process a heck of a lot easier, because we can very quickly identify whether or not you have an income gap. And so test driving the retirement, I love that idea. It's a great place to start.
Okay. Do you often recommend that people have an emergency cash bucket? Let's say something goes wrong, like replacing a roof, and you don't have insurance to cover that,
Yep.
or HVAC. Do you recommend that people have an emergency fund?
Absolutely. And that goes back to that 3-bucket approach to planning. Red bucket is risk. We have another bucket for income and a separate bucket just for bank emergencies and liquid cash that is easily accessible. So if you've come in to visit with us, you've probably seen your 3-bucket plan. And that's what we've done with a lot of folks is I think avoiding debt in retirement, if possible, is such an important thing. And if you have enough cash to cover an emergency, then it's a great way to not take on unnecessary debt in retirement.
Let's go back and talk a little bit about the portfolio review, if you will, because I wanted to ask you, a lot of people that are coming into the office they may not even realize what they have as far as investments go. They're not sure why they're invested in certain things. So as we tie into that and you're explaining that, how often are you also seeing hidden fees?
Hidden fees are a big deal, and we see them a heck of a lot more than I think we should. Okay. And it all starts with the education process. A lot of people don't know that if you own like a mutual fund, for example, there's an underlying management cost to that mutual fund. Okay, and that's a kind of non-transparent fee that you're paying each and every year. And so if we look at comparable mutual funds, I can't tell you how many times I've seen a fund that has a 1% fee and a fund that has a 0.2% fee, and the one with the 0.2% fee outperforms the higher fee fund. And it kind of goes back to what we had talked about, which is, if I'm going to pay a fee, I want to know that I'm getting my money's worth.
Sure.
And so if you are paying those internal fees, you want to know why you're paying them and how it's actually benefiting you. So when we do that complementary portfolio review, we're not only looking at the risk and the return in your portfolio, but we're going to be able to show you how much fee drag there is in your portfolio. So fee drag is a fancy word for the fees that I'm paying. How much is it bringing my return down unnecessarily? And that's an important metric to know, because if you can achieve a better return or less risk and do it in a way where you're paying less in fees, wouldn't that be something you wanted to know? And it's not possible for every single person, okay? But for a lot of people out there, it's a great opportunity to at least have an education and understanding of what you have going on today.
Prashant, I'm glad that you mentioned the word risk, because I want to ask you, how do you help determine someone's risk tolerance? What types of questions do you ask?
You know, you used to go to advisors and they would always just ask you, are you conservative, are you moderate, are you aggressive? And I always thought that line of questioning was really silly, because I could ask you, Cynthia, are you conservative, moderate, aggressive? You might say, you're moderate.
Yeah.
And I'd say, well, great, I'm moderate too, so maybe you should use this particular portfolio. The issue is we might have two completely definitions of what moderate actually means.
Yeah.
And so when I look at risk management, the first question I ask with regards to your portfolio is, if the market was to go through a catastrophic type of downturn, think back to 2008, think back to the beginning of the economic shutdown with COVID. If we were to go through another catastrophic market like that, what is the maximum amount of money that you would be able to lose before it made you feel tremendously uncomfortable? And that way we can assign a very specific dollar amount to that feeling, and that's how we can understand risk tolerance. I don't want to work in conceptual types of things. I want to work with specifics.
Okay.
So if you have $1 million and you said, I cannot or I will not want to lose any more than $100,000, otherwise it's going to eat me up inside, then we need to design an investment plan that keeps you within that risk tolerance with the highest level of probability possible. And that's what I think real risk management is all about.
Prashant, this is the perfect time for us to reopen the phone lines. Would you agree?
Yeah.
All right. To the viewers at home, the phone number to call is on your screen. That number is 833-308-5200. We know you have a lot of questions about how to retire with confidence, how to retire with peace of mind. What Prashant is offering you today is a complimentary portfolio review to the first 10 callers only. That number is 833-308-5200. If you are one of the first 10 callers and you do book that complimentary portfolio review, you will also receive a copy of Prashant's book, Fiscal Health, Retirement Wealth. It's a great read, and you're not going to want to miss it. Again, the number is 833-308-5200. We have to take a very short commercial break. When we come back, I have viewer questions, and one of those could be yours. Stay tuned.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
And welcome back to Retire Smart Maryland. My name is Cynthia Defazio. I'm joined today by Prashant Sabapathi of Elite Income Advisors. Prashant, a wonderful show that we're having today, and I love the viewer questions because we never know what people are going to be thinking when they call in.
Yep.
So I'd love to get through a few of those if that would be okay.
Absolutely. It's my favorite part.
It's mine too.
Yeah.
So Prashant, this is a great question. It says, Prashant, I love your show. I watch it every week. And I'm very curious to know, should people consider using life insurance to build tax-free cash value?
First of all, thank you for watching every week. So many people come in to visit with us, and they always tell me, I've been watching the show for like a year now, and I finally decided to call in. So thank you to all the listeners, viewers, I should say. I do radio too, so
yeah.
Listeners, viewers, whatever you want to call it. Thank you for that. But in terms of life insurance, we're conditioned to think of diversification as a really good thing, right? But when we think of diversification, we typically think about it with regards to our investments, having a well-diversified portfolio. I think when we look at true diversification, we don't only want a diversification of our portfolio, we want diversification of our tax liability. This is something I talk about in the book. It's tax me now or tax me later, right? Mm-hmm. And so life insurance, if you work with a licensed insurance agent who knows what they're doing, you could use life insurance, believe it or not, as a way to create tax-free or even tax-preferred income in retirement. However, just like with any other investment or insurance type of solution, you want to make sure that it is the best fit for you. And the best way to do that is to have an understanding of what all your objectives are, and then put a comprehensive plan in place to see whether or not that is a good solution for you. But the plan has to be custom tailored for your specific situation. You know, we've talked about this before. I don't think you can just take advice from your neighbor or your brother-in-law or your coworker, because what's best for them isn't necessarily best for you.
Prashant, thank you. Excellent response. This is a great question too. Prashant, what exactly is rebalancing a portfolio, and in your opinion, is it necessary?
All comes back to the overall plan, right? So just like we never ever give blanket advice on the TV show because everyone's situation is different. I've seen portfolios where it's necessary to rebalance it every quarter or maybe 2 or 3 times a year. But in some of these new actively managed, tactically managed portfolios that we've been seeing, they don't actually do a quarterly rebalance or anything like that. They react to market conditions to determine what kind of allocation you should have. And so I've seen both sets work, but it all comes, or both ideas work, I should say, but it all comes back to what is best for your plan. And, you know, as we've seen a more seismic shift to tactical asset management or active asset management, we're kind of getting away from some of that rebalancing older ideologies. It doesn't mean it's not good. It just means that it has to be the right thing for you.
Okay. Prashant, this is another really good question. It says, Prashant, I have not heard from my current advisor in over a year. Should I be concerned?
I think it comes back to what your expectations are, right? So when you come in to visit with us, one of the things that we do is we always try to make sure that we are a good fit for you. Because a lot of people come in and they visit with us, but not every single person becomes a client. And that's because we might not be a good fit for them, or they might not be a good fit for us. And so that is all about setting expectations at the beginning of the financial planning process, and then achieving those expectations and sticking to the process over time. So is it a concern? I think, for most of our clients, it would be a concern if you hadn't heard from us. But what were the expectations when you started with that advisor, right? Did they tell you they were going to call you 3 or 4 times a year and you only hear from them once every 2 years? If that's the case, then yeah, I'd say that's a pretty big concern. But, everyone's different. It's all about setting the expectation, making sure that you have the right fit before you get started.
Okay. This is a great question. It says, Prashant, I was lucky enough to obtain one of the 10 complimentary portfolio reviews. I love that. What documents do I need to bring with me on this first visit?
My team will send you out what we call our media response kit. So when you book that initial visit with us, you'll actually get a kit that is FedExed out to you. It's got information about our firm. It's got a data form in there, which you'll fill out prior to coming to visit with us. It's just a 4-page form. It'll probably take you 15 or 20 minutes to fill out. And we'll ask you to bring that in along with any financial statements that you have. When you sit down with us, we'll get to know each other. We'll determine whether or not we are the right fit to help you at least put that plan together and do that complimentary review. And so you're going to want to bring that information into your first visit with us. After that, we'll schedule you for another visit to take you through your custom tailored plan.
Prashant, with only a little over a minute left in the show, any final words of wisdom and advice you want to give to the viewers at home?
So 2 things. Number 1 is one of my old mentors told me that you need to be hiring a specialist, okay? And this applies to any part of your life, I think, whether it's medical or financial. I always look at hiring a specialist. So the person who's helping you grow your money may not be the best person to help you distribute your money. And number 2, you need to have a comprehensive and coordinated plan in place. All of the parts of your financial picture are a puzzle, and they all need to fit together.
Prashant, thank you so very much. To the viewers at home, we'd like to specifically say thank you for spending time with us. That number is 833-308-5200. We know you have questions about how to plan your perfect retirement. Prashant has the answers for you. Be safe, be happy, be blessed. We look forward to seeing you back here 1 week from today. Thank you again.